Traders, and welcome to Hit the Mark Trading's daily crude CL contract review. My name is Martin Rimes. Today's date, November 16, 2013. Hey, please check out hitthemarktrading.com. Learn a little bit about how we teach trend and momentum. While you're there, sign up for weekly blog updates. You'll find out about any free webinar I'm giving. You'll find out about, updates to the website, and then sometimes I will write a weekly blog that I contribute to other platforms, and I'll post that here too. Now, you're going to have an opportunity to sign up for Rooster Call. What is Rooster Call? Rooster Call is my early morning email that I send out to clients. It's very basic. All I do is I check the overnight markets, look at the wires, I look at the charts, and this is a very brief summary of what we are looking at before the day starts, okay? And I'd like to send it to you for free. So you can access this through the contacts page on the website. Okay, now let's go into our disclaimer, and then we can start the show on the road. Remember, everything I mention is for your educational purposes only. All right, so here's daily US dollar index, and we're just kind of sideways here, consolidating, right? We had a nice run up. We always know that 79,500 is very strong support. And of course, we get that from the monthly chart. You see that? 79,500. Price is telling you, all I want to do is bang up and down. Okay? So the day that we break below here is significant. We're going to 76. End of story. We break to the upside, we're going to 90. Absolutely, without a doubt. Okay? Now, there's been lots of people talking about, oh, dollar strength, dollar gonna go. But it hasn't. So you are better served before you embark on a gigantic swing trade. You are better served monitoring these benchmarks. Now, let's go to the weekly chart. Here's the weekly chart. Well, we were in an uptrend on US dollar, and then we kind of fell down, tested our 79,500. And then we have made the move up. Where to? To the moving average and back up to this channel line. Now, it is very common in charting to see that we break down and then retest the former channel line. Very common. So this week is very important for US dollar because we are either going to jump back in, and if we jump back in, typically, we will overcompensate to the upside the amount that we went to the downside. And I know it seems strange, but that's what they do. So we're watching for, are we going to pop above 82? That's what we're watching for. Otherwise, I do measure strength of trend, and we are in a very strong downtrend on the weekly. So one of the things we do is we look at this thing and then we expect a trend continuation. So why is it that we cannot expect trend continuation and just be over with this? Well, it's simple. The US dollar index is going to be moved, buffeted, and jerked all around based on the latest from central banks, either Federal Reserve or ECB. Okay. Now, let's go to the daily chart. All right, what happened? We ran back up. We're consolidating. We're basically sideways, right? Now, I'm going to blow this up so you can see this. If we drop, we're looking for price to come right down to this level. We could go down to here, yes, but we're looking for at least this level. And if we move higher off of this moving average, then I expect we're going to see a run all the way up to the 81, 88 area. Okay? So again, if we see any type of a pullback, we're going to go here. That's 80-60 area. Maybe touch here. And then we expect this trend to continue back up. Okay? And just what I mentioned on the weekly chart, I'm going to mention on this daily. When we finally break up through a channel line, it's very common to see a retest of that. Very common. Okay? So price truly is at the juncture of either dropping according to the weekly chart. Weekly chart, you know, they say is stronger. Or embarking on a new trend higher. And at some point, daily chart will, of course, break into a new trend before you see it reflected on a weekly. Okay? So, we're looking for here, maybe here, and then a move up. All right? Very good. Let's go to the intraday chart for Monday. All right, well, the first thing I want to show you is this 80-60, because we said price might go there, right? So this is a big magnet wants to pull price down. You see the US dollar is in a very nice established downtrend. Now this chart I'm looking at is a range bar chart. What that means is each tick represents, each bar represents 10 ticks, 10 price ticks, okay? All right, this is not a tick chart talking about orders. This is a 10 ticks of the price bar, okay? All right, so we're seeing a very steady downward progression. If we continue moving down, your first target is right here where this line is, okay? That's the first target. In the event we go lower, we talked about 80-60, okay? Now, if we power higher, then we're going right here. This window, okay? So let's just look at how much is that worth. Okay, of course this will change when they start trading Sunday night. 275 on the upside. First stop 125. Second stop 250. Okay? All right, very good. So that's what it looks like for Monday. And I do think that the market has to figure out what it wants to do as far as how to interpret Janet Yellen in the US dollar, because you've got, on one hand, crumbling fundamentals in Eurozone, and on the other hand, you've got continued currency debasement reinforced with Janet Yellen and her Senate confirmation hearings, right? So, how are these traders going to move the market? That's what they themselves are trying to figure out. I'll talk to you later. Have a good weekend.